Welcome, everybody. We actually have Bitcoin Spike. It's time for a Bitcoin Spike. We're going to get on the air here. I will have to rename the title of the video, but we're excited because we're having some positive price action. I just slammed into the computer room and wanted to make sure that guys, we were ready for the office here. And looking at the price action, we're up 8.4%. So nice job. Way to move. Guys, it is part of the overall crash, but we would call this a Bitcoin Spike video live stream. Hope you guys are doing well. Up and over this specific wedge has given us a lot of trouble today, guys. We didn't know if we were going to be able to get up and out of it. We had several channels to the upside to look at. And shout out to all the VIP. I want to wish all of you a happy Father's Day. I hope everything's going well with you and your families. We're excited that you guys are posting pictures in the back, etc. Let's go ahead and look at some of those pictures because they're cool pictures. Look at Freddie and his family. What is up? This is VIP. Freddie, congratulations. Beautiful family. Very nicely done. In terms of Luke, look at Luke's kiddos. How cool. It's Father's Day, so we're going to spend a minute or two going through this. Luke, we love the kids. They're awesome. Look at Luke and kiddo, the team. What's up, Luke? Very nice. Now, in terms of additional, we have one more, and that would be Sean, newer VIP. What's up, Super Dad in the house? Sean, thank you so much for being a VIP. You guys rock and roll, and you good traders, guys. As long as you can trade, you post those family pictures. Yeah, just brag a little bit if you have to. That's just awesome, guys. Way to go. Very, very cool. And I hope you guys are doing well. In terms of this specific feature here, level of resistance, level of support, we have that indicated in red, that specific move to the upside. Guys, what I'll say is we have to get through the ultimate, and you guys know we're right at that figure that I told you this morning in the video. We're right at that figure, 20,500. I said 20,500 to 21,000. That's really where I want to see the bulls engage. Up to the point of 20,500 is okay. 21,000 is going to be the crux, guys. It's going to be the crux. And really, as you look at this, it is the convergence. It's the apex of the convergence. We need to get up and over that and just blast through the rising wedge. So we could have done this a little differently. We could have formulated a little bit of a more of a channel to the upside, a little bit less technically bearish. Would have been a bit more, I'd say a bit more, what would we say, just conducive towards a sustaining move to the upside. However, the fan reversal technique, guys, this confirmation play in here, I'll just say that on this level of resistance here, the confirmation play may be a saving grace of this specific rising wedge. As we would look at it, to get up and over the wedge would be fantastic, over the resistance, hit that $21,000 mark, then boom, back as a specific confirmation would be great. But we're definitely going to have to deal with this specific rising wedge. It's not going anywhere. It's not going to change. It is what it is. It is a rising wedge. They are by nature bearish. We would expect generally capitulation through the level of support. If we do not get the capitulation through the level of support, we'll be excited because we'll have a downside target. So in terms of, let me take a look at this. Let me see if I can, in the background, if I can change, and I want to change it to Bitcoin Spike. There we go. I changed the name of the stream to Bitcoin Spike. There we go. Instead of the Bitcoin crash, it's Bitcoin Spike because we have a spike. Good job, guys. And I know the VIP are trading. Freddie's in the house. What's up, Freddie? Let me get over to the chats real quickly and say hello to you and your family. I showed your picture in the beginning. If you guys don't have a trade group, or if you do have one, whatever you got, guys, we'd appreciate you guys considering VIP. And if you're already VIP, you guys know, because it's a lot of fun. We have a good group in the back. It's really cool. We have a good time. So if you're cool people, you like to trade, you know, blue collar, white collar, doesn't matter. Old collar, new collar, doesn't matter. If you want to beat the market, you're into the pathway. Remember the pathway, guys, that we have set out is a 100% trade, is a 200% trade, next a 500% trade. Thereafter, we're looking for a 1,000% trade. I want you to get a 1x. I want you to get a 2x, a 5x. Yeah, a 5x on Bitcoin. Then let's get a 10x on Bitcoin. Anthony talking about raising the parameters even more, trying to get trying to even really go galactic, like a 100x. That's great. That'd be great. Get like a 10,000x. That'd be great. Get a 100x on your trade. Sounds fantastic. Sounds perfect. In fact, Anthony, great idea. I was actually thinking the same thing. I'm glad that you came up with that. You're the only one to come up with it thus far. So that's obviously the next step in the road. Let's look at how many of these. I brought a Bitcoin. I did bring a warning. All right, I brought a warning, and everyone probably think, well, he brought a warning because of the volatility. And look, London doesn't even know. Really, how many people are short? That's the one question I would have, guys. How many people are short right now? Oh my gosh, huh? You don't want to ask how many people are short on Bitcoin. So when I bring a Bitcoin volatility warning, etc., and we're counting the number of 10x's, literally to be 1, you guys got this, to be 2, right? To be 3, there we go. To be, you guys know, to be 4, right? To be 5, and we got up through 6, and we're at 7. Is it? We have 7 preceding. There's 6 right here. I want to make sure that that was 6 in this zone. Yeah, 6, and now I do believe we have achieved. Let's see, we're close to being at 7. Close to being at 7 over the preceding 5 to 6 days here in terms of potential 10x trades you could have as a trader. Guys, that's huge. That's a big deal. If you're working on trading, if you've mastered it, this is just the coup de grace. This is awesome, guys. This is the way. This is what you want in terms of the volatility. If you're just working on your trades, this is perfect, guys. This is exactly what the doctor ordered. This is exactly what we want to focus on. I want to remind you all, it's Father's Day. You all know that. If you don't know, give Pops a call. If Pops isn't around or for whatever reason, give somebody you love a high five or something else cool like that. That's what we'll say in terms of that. Hope you guys are having a good day. And if you're not with your kids, with your dad or something like that, just, I don't know. That's maybe why you're here. Maybe that's a cool thing in terms of that. Maybe we get to hang out, just us. All right. So that's a cool thing. In terms of level of resistance, level of support flipped into this specific feature, we would look at the fan reversal. I just like that specific notion that you have multiple levels of resistance to beat. That's the idea with the fan reversal, okay? Some people will get so excited about the first level of resistance that's going to be beaten. They're going to hammer into this like it's going to go back to the moon. And guess what, guys? Typically, you're going to have a fallback feature to prior resistance to confirm as support. This is a big fallback feature here. So in terms of that, if we can break the level of resistance here, certain time frames like the 30-minute time frame are already demonstrating that we're out of the level of resistance. You know that 30-minute time frame right now on your screen, boom, to the upside. So the point here is as well, is this time to launch into heavy Bitcoin trade? We're breaking a resistance. Guys, the notion of the fan is a resistance broken, flip to support, resistance broken, flip to support. Can we get a confirmation along that top line resistance line? Let's go to the 4-hourly real quickly. We've paid a lot of attention to the 4-hourly. Let's clean the chart up real quickly. Let's take a good look at the 4-hourly in terms of this feature. We had laid out, and let's just review. Let's touch back base into the specific level of support carry up to. This is the key. I really think this is the key focal. This specific, as we would look at this 4-hourly, because different time frames right now are going to be explaining the price action differently to you. 8.7%, 20,720. What's up? We're up to 20,700. I want to get to that 21,000. The 4-hourly is a nice demonstration of how deeply we have carved into. Look at this on the mean reversion channel. Last time we were this far down, we did clear the channel. Again, it would be nice to clear that channel completely here. The mean reversion channel is something nice to accompany your pattern and your charts, guys. So an additional, 4 or 5% would be good, up to 21,700. That would be good to clear that channel. Would put us squarely into the Bollinger Band on the top level 4-hourly. So in terms of the specifics for this channel formation, let's just look at this level of support, level of resistance. I want to shout out for the gains. All right, in terms of VIP, I know there are multiple triple or quadruple digit gains in the back with VIP right now. I just know that on this specific move to the upside. I'm in a quad right now. I know we have several triples going on. Congratulations to everybody who's trading Bitcoin. It's a big deal, guys. You guys are just completely cleaning it up, guys. It's nice. You're just cleaning house. It's you're taking names. It's nice. Good job. In terms of kicking button, taking names, guys, you're doing well. Level of support, level of resistance. Now, carry up feature for the bottom line support. We would take this bottom line support, carry it up to the extent that we had it differentiated. This is going to be the, and it's good to talk about this. This is going to be the difference here. We had this specific level of support here. Note the differentiation on the candle wicks, because this specific level matched up perfectly, if you guys will recall, with this top level resistance here. We had a really nice channel formation here before we decided along the downside here to capitulate beyond. We had a perfect channel here. You guys know this. So just remind yourselves of that, okay? In terms of this, remind yourselves that this top line resistance here matched up perfectly along the bottom in terms of the candle wicks. Great chart, huh? Very important. And nice doji. You guys see that doji? Very important. Nice doji before just the crank to the upside. That was very, very nice. Maybe a a blowout doji here. You got to be careful of those dojis. Huh? Not real big into candle wicks. We can focus on them, but the general consensus is that they were discovered or promoted with fancy names to try and make a buck. That's literally what a lot of the guys on Wall Street, some of the key players, believe. It was just literally fashioned up with some cool Japanese names, and the point of them is to make a buck. That was it, guys. So they're consistent to the extent they're consistent. They work. That's fine. The nice doji, though, I'll say a nice doji would have been preferable to have it in this zone. Maybe a bullish engulfing, I'd say, but we don't have to go down that road, do we? We don't have to go down that road, guys. In terms of that, I just want to go to the candle wicks because it demonstrates the level of support very clearly here that was in play. Okay, so in terms of an accurate channel that you're looking at on the 4-hourly, a great time frame. We just note the deviation here. Okay, due to that deviation, yes, we have changed the framework of the channel, so we do have two approaches to this channel formation now. One with including that level of deviation along the bottom, and the original here just with the resistance down to these first two hits. Just understand that deviation does exist, and that with the original channel we still have not broken out, which would be that $21,000 mark that I was looking for this morning. Told you about this morning would be nice to get up and out and over that $21,000 mark. And let's see what we have here in terms of the framework of the 5-minute. I hope you guys are having a great day. I'm sure that you are. And just because we were looking for a day like today, you guys know I said on the stream a few days ago, like, we just keep waiting. We just keep wanting this green day. You know that we just want a green day. We want it to go, 6%, 7%, whatever it could be. We just, we're ready for some action to the upside. You guys know that we just been ready for that amidst all the red. It's like we got to get a bounce. We got to do something. Bitcoin's got to, the screens have to turn green in terms of at some point she's going to find some coordinated. And it's been interesting, guys. You know, there's some coordinated, timely event where we can actually be in the green. She just hasn't wanted to turn green. Plenty of volatility, 10%, 10%. You guys know that. Multiple. These are 10Xs if you trade them correctly, right? It's just she hadn't wanted to do that, in front of the public. Like, literally, she hasn't wanted to be like green on Bloomberg or CNBC. You haven't been able to catch her in the green this last 5 days, 6 days, 7 days. It's just been all red. Right, even with the huge swings to the upside, even with the huge, you guys know that. It's very interesting, huh? So we've caught her in the green for a minute, meaning Bitcoin. She's been a little bit shy of anything having to do with bullish sentiment. You know this in terms of the. I hope you guys keep an eye on Bloomberg. I want to let you guys know I had that on like all day long. It's okay to have on, guys. It beats the heck out of standard whatever else you're trying to find on, if you're hunting on YouTube, whatever you may be looking at. Just Bloomberg is pretty nice, guys. They've got some good insight, good input, and I hope you guys. I don't know if you're not into Bloomberg. It's a nice little network to keep around. And let's see what we have in terms. Let me lock these channels into play now. Let's see, we're currently in a specific, looks like we're in a pennant formation. The wicks are nice right here because we're getting the indication just of a nice pennant formation. We don't have to hunt down through, we talked about this in a short video the other day, but we don't have to hunt down through the lower time frame down to the 5-second, 15-second, etc. We can just look at the candle wick, right, to the bodies, etc., and really accurately define this specific price action as it would exist on the lowest time frame. So just flipping to the wicks, I don't always stay on the wicks, but just flipping to the wicks is a nice methodology to work with. So I encourage you. I just encourage you all to make sure you check the wicks, and I know that you guys do, but it doesn't go without saying. Right now we're in a position where we need to know every ounce of the price action. I know a lot of you are in trades right now. This is the top line threshold. We're over that first specific, as we would talk about those two channel formations. We're up and over one of them. This second channel formation, that resistance is incoming. Okay, so we were just about dead on accurate this morning with and you'll see the bottom lines here in terms of those channel functions. Okay, now I put black to the middle of them so that we can see a little bit better the candle wick formation. I want to welcome you to the stream. This is London with Bitcoin Spike. Hope you are all doing well, and shout out to our VIP top level of membership. And I'll just tell you, top trade team, boom, period, zero question at all. It's not like, hey, I got a group and hey, I got an idea. It's like, no, this team knows how to trade, period. We got the top dogs in crypto. Shout out, guys. You're just killing it. I don't see any returns at all in terms of crypto, the way you guys are able to just manhandle the market. That goes for you too, Venus. For you too, Venus. Nice photos you got up there today. Love the new Twitter. Way to bring the heat. That's nice. Very good. Bring that heat. Happy Father's Day to you and yours, in terms of your family, etc. Looking at a capitulation here, this 1 minute's pretty clean, isn't it, guys? In terms of that specific pennant formation, understand anytime that we are over the top of a rising wedge, you guys know this, anytime we're up and over the top of a rising wedge, these patterns become difficult for bulls. Not impossible, but difficult. Any bullish pattern over the top of a rising wedge becomes difficult. You'll see very sporadic, chaotic action surrounding anything that's bullish. Now, it's a 1 in, what would you guys say? You traded up a 1 in 2? A 2 in 10 or a 1 in 10? 1 to 2 in 10 really is what I say, probably 10 to 20% chance of a real bullish structure here over the top resistance of a rising wedge. Boom, just nailing it to the upside. You guys know this. And when she does that, she's most likely formulating what we're seeing here a bit of is a secondary level of a rising wedge. So we'll have and this is the way that it goes when it goes, right? We'll see a level 1 rising wedge, essentially just a rising wedge. We denote it as a level 1. Then we'll denote the secondary one as a level 2 rising wedge. Why would we do that? The purpose is the following. If we can get up and over a rising wedge, we like to target the downside, right? That agreement, the demand function between the buyers and the sellers. Same goes in reverse for the descending. You know this. The demand function between the buyers and the sellers, okay? Buyers on support, sellers on resistance. The conclusion here, that apex, the agreed upon target of the price, target of that demand function. If you can imagine doing advanced calculus, etc., you don't have to do that. You know what it is. We have a chart. Can you imagine having to do that? Having the purchase orders, having the sell orders. Could you imagine back in the day, they used to do things like that, guys? I'm talking about the buyers and the sellers with the exchange information, etc., order books. Imagine calculating the market without a graph, without a chart, and coming up with this specific level right here, coming up with the 21,142. It is calculable. Is the point beyond what we're looking at, beyond the notion of a specific pattern formation? This is a calculable, conclusive, literally the end function, or the end. It's the conclusion of this demand function. The buyers on support, sellers on resistance, independent of what you would look at or what you would think or how we would describe it. This is a calculated event. This right here is a calculated point, period. Just from the data in the market, literally, and you guys know this. A lot of you guys are smart enough. You agree with that, absolutely. With the orders with the orders and pickups, the market activity on support, the let goes or the pickups and orders, you say, even with the shorts, etc., guys, it gets complicated in terms of the functioning that you would need to calculate this specific level here, this apex. But that is the conclusion. That is the expression, concluded expression of the demand function. Period. You guys know that, between the buyers and the sellers. So this is a huge help that we can put it in that context to say, yeah, okay, so that literally is a calculable level, okay, that we do target on the way down. It's the concluding, the price, ultimately a concluding price of this demand agreement. Bottom line, you guys know we can calculate it. For a lot of you, you're heavy enough into the math, you agree with that statement. I know that you do, and it's nice that you guys are the right kind of group that you can conceptualize that very easily, right? It would not be an easy calculus. It would require some and can you imagine not without computers? Can you imagine, guys, a lot of that old style work used to go into the mix that we now have the benefit of. So looking at this secondary, more aggressive, when I talk about like a secondary demand function or a secondary level in terms of a rising wedge, it's the same description, although it's just gotten more aggressive. It's gotten more aggressive. It is tightened up, and the buyers have, for whatever reason, I'd say this, between the buyers and sellers, we've engaged in like a secondary demand function internalized, first of all. And I would say as we would express this to the upside, and this is a bit, I'll tell you, typically when we see a level 2, I really like to see it like this. You guys know that. I like to see it a little bit broader. I like to see it really, really to the upside like this. The notion there is we've just gone to a new demand function. And when we see, I'll tell you, when we see a level 2, level 1 is important. Now, please just receive what I'm saying here. We'll get to the price in a few seconds, okay? In terms of a potential for a downside target at this literally calculable level, calculable target, guys, from between the buyers and the sellers, all of this demand activity, this demand equation, boom, is a calculable level, something we will target if we're up and above. All right, there are conditions to it. We have a target. Do we have a pattern to get us to the target? A lot of different approaches that we'll take personally in terms of VIP, in terms of hitting this target or not, in terms of a short. Boom. Okay. In terms of a level 2, what I really like about the level 2, if we can establish a level 2, is the following, is because it represents essentially we've got a if we're up and above in this zone as we just got into. Now we experienced a price line, a literal price divergence. Okay, we always talk about a MACD and RSI, all the different divergences that we have. Correct? You guys know we do. But when we're outside of the demand function between a level of resistance and a level of support, when price goes up above the demand function, okay, between the buyers on support and sellers on resistance, we have a divergence of the price action itself with this specific demand, the demand function. Very important, and even more important if we can ever establish a level 2 wedge. And I'm going to tell you guys, these are where we start cooking with gas. If you want to know about a short, I'm going to tell you guys, when we can establish a level 2 level of support, level of resistance, and a secondary, more aggressive demand function to overtake the first and operate within itself as a divergence, and then get up and above this specific demand function, this is where we start cooking with gas. I want to let you guys know this is where we get very interested in terms of shorting, because we have a compound divergence in play with the price action up above one agreement, up above a second agreement in terms of those demand functions between the buyers and the sellers, and the buyers and the sellers. I just tell you, we watch these very carefully. For those of you who don't know about what a double divergent price function would look like, if you will recall ApeCoin last year, we did stream it. It went through one of these. That was one of the biggest drops that I walked everyone through, compounding into shorts up above a level 2 wedge. If you don't know what happened to the price of ApeCoin, watch it. Look at the double degree demand function. And we don't trade that worth anything, guys. It just had hit the market. Let's trade it. It was phenomenal price action. I walked people through shorts in terms of how to compound into shorts over a situation like this. And boom, guys. It was as exciting on the way down as it was on the way up, to let you know. And we covered some important features that stuck with us that we can apply to any coin. So that was what it was. A lot of people were trading Ape, wondering if the Bored Ape Yacht Club was going to be a significant utility, etc. And it just did. I don't know if it fizzled a bit, guys, but it broke down hard. We'll say that, guys. It broke down phenomenally well on a level 2 boom trajectory to the upside. And guys, that was a colossal short for anybody who watched that stream and dug into that. Congratulations back on ApeCoin. Now we focus on Bitcoin. Bitcoin is boss. You guys know that. Without a doubt, I want to shout out to all the VIP. I'll shout out to Angel as well. Happy Father's Day, Angel. Hope you're doing well. It's been a minute since I've talked to you. Hope your family's going well, doing good, and happy Father's Day. Shout out to you and family. Angel involved in just a friend of the channel, involved at $7.79. Okay, used to be very active. I'm not sure how he's doing in the market right now. Maybe a bit tough for a lot of participants right now that are involved in equities, particularly equities and crypto. It's just a tough time. It's kind of it is a financial winter, not just a crypto winter. When you look at $20,000 Bitcoin, let's just review the technicals here in terms of being over the top of this rising wedge. It's a difficult to reframe. It's a difficult position to be in. Now we had and I just want to reframe this. Please just put this in your toolkit, please. In terms of any time that you see over the top of the resistance of a rising wedge, anytime you see, whether or not it be right here, let's dig into the lower time frame so you can see a better picture of what we had. This specific bull pennant. Now, a bull pennant will want to push into a flag. Put that in your toolkit as well if you guys don't know that. A bull pennant typically will want to push into a flag. Okay, it has to do with the symmetrical triangle and the catch feature or target of any specific symmetrical triangle. If you guys don't know TA particularly that to that extent, understand that any specific, just understand and take this to your own review. Okay, go with it on your own review in terms of level of resistance, support, carry down feature of the top level of resistance down to boom, initiation on this first hit at support. Flags like to occur. Watch for the transition. It's not a guarantee, but watch for the transition if and when you can get any type of a bull pennant and it fails to the downside. Look for a catch in the form of a flag. You're already seeing that it's attempting to do so along the level of support. We need a kick up in this direction, okay? And the point of this, again, is to remind you that anytime we are up and over level of resistance, guys, on an ascending wedge, generally a bearish pattern, that the bullish patterns are difficult, whether or not right along the line. It doesn't matter if it's right along the level of resistance. Some people say, well, London, what if it's just up and over? Is it about to go boom to the upside? What is it? Does it make a difference if it's right here underneath the level of resistance? Guys, this whole zone is I'll tell you, for some traders, it's just a no-go zone. Now, you can look back on the charts of Bitcoin, and you can see if it's a complete no-go zone, it could definitely bite you. There are a few instances where she will launch from this zone. It's just very sporadic. It's few far and in between. But this whole zone, and I literally mean this, guys, you can look back through and just understand how your patterns do affect, but you could get back into, and she loves to do stuff like this, a nice framework of a bull flag up and over, and just get you right up into here. And, people are just dying to get into the bull flag, and then boom. You guys, if you look enough into the rising wedges, they can just be a little bit fatal for longs, okay? So to the extent that we respect them, we do, but we do regard the single rising wedge differently. We categorize that differently for the record, and you guys know this in VIP, and the VIP in the back know this. In terms of this, we categorize it differently, a single rising wedge, than if we had a double rising wedge. Right now we have a single level 1 rising wedge. I just mean essentially the first demand function that has been in place. We're looking for the potential for the buyers, guys, to push price up into to accelerate, essentially to accelerate. I read a CNBC article with the sell-off accelerating in crypto. We just want to right now see an acceleration in line with a small kick in futures for the equities, guys. Futures are slightly up. The NASDAQ is slightly up. Always compare. I'm just going to tell you guys, as a matter of fact, the NASDAQ is the technological sector. That is the technological sector of the stocks, of equities. So when you talk about the stock market, and this is going up or that's going up, well, guys, we focus on the NASDAQ, okay? The NASDAQ is the technology sector, i.e. Bitcoin, okay? So to the extent there's a correlation, which Bitcoin has frustrated that agenda, I believe, very much so, having some good green days when the markets are down and having some really difficult days when the markets have been decent recently. So level of support, let's go ahead and take this specific. And we have a dual indication. And essentially what we're always looking for, this is confirmation. I want to shout out to the VIP right now. A lot of you are in trades. I know that, and you guys are doing very well. Quadruple, guys, in terms of 1,000% plus. Some of you 500, some of you 200 or 100, guys. Let's see. What do we got? Anthony's on the screen. What's up, Anthony? Just fine time. I shout out to you. Just saw that. What's up, Anthony? I'll put some rockets on there, my brother. We'll put how about some Ferraris too? Boom. I'll put some targets. And let me put Freddie and Anthony, VIP. There we go. Let me put this in the deal. And you guys are just rocking it. You're just really, really rocking and rolling it. It's nice to trade with you guys. That's the cool thing. 2022, we're trading. Bottom line, if you guys are if you're in the back, you're trading. I know you are. You may not be publishing all of your returns, etc., but it is that group, guys. It is the consistent group that continually, day by day, we're just not missing. We're not missing much. I want to let you guys know that in terms of you guys know 2,200%, 700%, 169%. We have new trades every day. This is a deal I saved this for Torque. Torque, I wanted to shout out to you. Look at this. He's happy he sold his biggest bag at 47K with buy orders below. Watching the streams then, he says, I could have been down 65% if it wasn't for the kingdom. Thank you, Torque. And you brought up some good information there that I covered in yesterday's stream. Very important about the percentages between the Fibonacci's. How crucially important is you would look at the percentages between the Fibonacci's. And we hadn't really covered that. We hadn't done that, and Torquay brought that up, and I was like, man, I've calculated that on my own, but just you having brought that up, as we would look at the baseline target, and has anybody looked at is it Bit, Phoenix, Bit? There are a few, I'm going to say this right now, there are a few exchanges where this 786 got real close, guys. I want to remind you of the fact that we have differentiation on the exchanges, etc., to let you know this 786% retracement, 78.6% down. Yes, a few of the exchanges got horribly close to the 786. Guys, Binance did not. Okay, so we're noting some differentiation. Jubal, VIP, what's up, Jubal, brother? Hope you're doing, hope you're having a great Father's Day. By the way, we'd love to see some pictures in the back, Jubal, of you and the family, etc. I know you're busy with the kiddos. We'd love to see something like that in the back. See if you can do something like that. It'd be awesome. But looking at the 786, we're very far away in terms of we have some room to go. Can you imagine just a few exchanges hitting that 786 already? The purpose of yesterday's stream was to tell people between the top of the golden pocket, the 61.8, and the 786, it's a 43% difference. Guys, between the 61.8 and the 786, it's like, well, it shouldn't be. It's only an additional, what is it? It's only additional 15% or so. I mean, come on, 10 to 15%. No, but it's the entirety of the price action. So it's from 0 to 69,000, it's 10 to 15%. But if you were just to look at this specific entry at this level, boom, well, you only have this much price action to work with. So literally you're going, instead of, and you guys know this, instead of working with the entirety of the price action, you'd be going from this entry literally to this entry. You would literally have this much left. So it's, yeah, we get very exacting when we get down to the lower levels, because this is the reality. You made an entry here and you wake up and you're left with this here. Hey guys, you got to be careful. So shout out to Torque. I appreciate that lesson. Just very important that we focus on something like that. And I saved that just to remind myself for that stream. But 44% between those levels, that's huge. That's a big deal, guys. If you're looking to go in with heavier cash, etc., that can make a big difference. Always ready to compound down at lower levels. I like to throw in an extra maybe 5x so that you guys know, not on leverage, but if I'm accumulating something, I like to have at least 5 times so that you guys know. I like to have at least 5 times so that you just know how I operate, waiting at that next level below 5 times my current level of exposure. And even on the 86, below that 786, I like to have compound levels below that. Okay, so it's very, it invites you towards, you'll get to the mentality, honestly, where you're never overexposed and you really want it to go down to your next level. That's the idea, okay, to where you don't ever fret it going down. If it can go down and pick up your next compound down level, you're excited. That's for accumulation. And you guys know, not financial advice, but it's not a security, so we really don't even have to say that. To the extent that you guys are maybe financial advisors, we would invite you to be in VIP and go ahead, just sling at it if you want to try and give financial advice on Bitcoin, but it's legally it's an impossibility. It's not a guys always say it's not a security, so you can't give. Not that you're not allowed to. It's impossible to give financial advice on Bitcoin. It's just not a security. So level of support, level of resistance. Okay, looking at this specific feature, we've covered this in depth. You know this. We've covered this in depth in terms of this specific carry-up function from the level of support to the resistance. We need to pass through that specific $21,000 mark. Crucially important. Let's see if I can rewind the chart here to get us back to something that was interesting. There we go, right into that rising wedge feature. Trying to pick up again. I told you that typically we would try to catch a specific bull pennant into a bull flag. So to the extent that any pennant, it involves a symmetrical triangulation, just pay attention to this and make sure that you're aware of this. Any symmetrical triangulation has the option on it too, if we would look at the parallel channel, carry down the level of resistance, boom, down to support. That's one of the natural targets for any symmetrical triangulation, so that you know. One target is the specific amplitude. The specific amplitude could go to the upside, right? It could go to the upside on breakout, or it could go to the downside. That's one option the market has. Second option, guys, equally as valid, is a resistance down to a level of support, period. That's just it. We measured that from the specific hitch in the level of support, or if we were going to the upside on a symmetrical triangulation, just so that you know, On the upside, we would be looking at drawing it from the support up to this original hitch here on resistance. So that's how we come to expect. It's not just a saying. It's not just, hey guys, look for a bull flag out of any specific bull pennant, because we have a run to the upside, a symmetrical consolidation. It's the pull down feature of the resistance, boom, down to this original hitch in on support, and that specific target option here in the market is why we like to see, why we commonly and frequently see, it's a common factor, guys, that we commonly and frequently see the specific bull flag resulting from a failed specific bull pennant, as the market chooses that specific carry down function of resistance, boom, down to support. Very important, guys, in terms of that. So on the targets, we will get in the back right now. I know it's Father's Day. I know you guys are doing well. I hope everyone's doing great, to tell you the truth. And I just wanted to come for a bit. I didn't want to interrupt in the middle of the day because I know it is Father's Day. We're up 7 to 8%. We're cooled off a little bit in the specific function here of this specific rising wedge. We do have some issues up and above in terms of the level of resistance. Okay, we need to break through that $21,000 zone, and it needs to be done handsomely. I'll tell you, it just needs to be done with conviction, as they would say. Okay, we need to have a decisive move with some conviction up and above 21,000. Looking at the reversal feature of this resistance to support, definitely looking at the framework here on the different time frames, you're going to have different conclusions as to whether or not we have broken out the 12-minute, for instance. And I check all the time frames, guys. Say, well, that's not popular. I check them all, guys. You'll find some nice new targets on some different time frames. You just will. You'll find some different targets that you'll hit on different time frames. I know it's not easy to check 7 to 10 time frames, but it's worth it, guys. Looking at the 30-minute, and I won't bore you with all of them, but on the 30-minute, I always say, is your friend or is your foe? You know that it can be your friend or it can be your foe, the 30-minute. And we like that approach. Just give it a little bit of characteristic, because sometimes she's got a pearl, a gem. It's like, oh, no, the time frame is looking like this right now. And other times she'll throw you something. And when she throws that to you, let's just say half the time when she throws that to you, or a quarter of the time, it's like, man, I wish I never would have seen this. You know that. So in terms of the features here, I'm going to leave you guys with one purposeful thought here, okay? One purposeful thought as we would look at the higher levels, okay? The higher levels of BTC. Let's go to the hourly, okay? Let's go to the hourly time frame. You'll recall here where we poured down through this specific function here, okay? You'll recall that we have some upside targets, right? And in terms of the notion here, let's look at this specific feature here. We have a few different upside target levels that we've been looking at on the 4-hourly, on the hourly, etc. What I'm going to say about these higher levels in terms of the functioning, in terms of our ability to recapture, let's just say even to recapture this level of the 28,400 and 411. What I'm going to say is, guys, this specific move here of a 39 to 40% move in my book is not going to happen. Okay, that's not going to be in the cards in terms of what I'm looking at right now. That's just in terms of the information that I'm looking at right now. That's just not going to be in the cards to the extent that we would have some of an idea in terms of, well, why would you make a statement like that? I just want to remind everyone of this specific feature here to the downside. You can disagree with me, but solid technicals here. I'm just going to say this as a matter of fact. And by the micro, if things change, we'll be in the back. I'll be happy to update at any point in time. And you guys know this. We may say something could drastically change. Okay, it would take something hugely drastic in terms of that. But what we have here is literally, and I want you to think about this from a VIP perspective, please pay attention, but recouping that preceding level, it's just not in the cards in terms of this specific feature that you would look at. There is an obligation that's been carved out, not just right now. It has been carved out for the last, and let's put this into context, in the last 229 days, guys, the last 7+ months, we have had just a cavity in the demand function of Bitcoin. Boom, heading down. You guys know the bear flag, right? Move to the downside. Boom. clear move to the downside with an upward sloping channel. Just a textbook bear flag. Now, when you think about like where are we now, where are the buyers now, what's going on right now, I want you to think of the function of this specific bear flag as not just being a specific a new phenomenon in the market, right? It's something, well, we can beat that tomorrow. It's brand new. It's 7 months old. Literally from the drop here, establishing that move to the downside, this upward sloping channel. It's literally like there's a cavity, there's a hole, there's a well that has been dug, right? There is a hole, and it started in this zone 220 some odd days ago, literally. So you understand, it's not just right now that we're dealing with. It literally started, boom, here. This was the initiation back 7 months ago. That foundation, boom, was set for the particular moves that we're going through right now. In terms of the obligation of the sellers, technically speaking, and we've talked about this a bit in the back, but the obligation of the sellers, technically speaking, is a repeat of this flagpole, boom, to the downside. Okay, so until we reach that obligation of the sellers, I don't see a real reason to turn around to turn the market on its to turn the market over. Me personally, if we were in this specific zone, and you guys know, you know us, you know me, if we were sitting here in a bull flag like this, you know darn straight that we would, I mean, without, I don't want to curse, guys, but you know without a doubt we would, bam, be purposefully, literally tying into the height of the flagpole. So we just would, technically speaking, if you want to use your specific extensions, and guys, that's going to tell you this exact specific preceding flagpole, boom, boom, boom. I'm going to tell you, we're looking at $15,000 is the technical target. It's the technical target to which the market is looking for the bears to complete their obligation. Now, to the extent that we run into a different, guys, and it's not just easy to say, well, it's just not in the cards, just boom, boom, just up to 40, up to 30, 40, 45. We're having a green day, so that's exactly the thing we don't want to hear is like, well, London still thinks it's going down to the target. It just is a technical target as much as you would express that to me ever. In terms of a bull flag or bear flag, I'm going to have the same approach. I'm going to technically, and this is the approach I'm going to take. I'm going to technically weigh in on it. I'm going to trade it, and I'm going to trade with the technicals every time. I'm going to do that every single time. To the extent that there's a deviation, no big deal. And to the extent that one of these doesn't work out and a bull flag worked out or didn't work out and this one only went halfway and dang it, it was an underperformance for some reason, I'll take my chances. I'll take the probabilities. I'll work in with that. But in terms of potential for heavy cash, I'll say this, guys. First of all, if you know how to trade, it's not as concerning to me, but the notion, like what Torque brought up, in terms of an opportunity to buy lower or to have your cash go down 30 or 40%, I'll just say, unless you have that kind of capital to throw at things, and it's not going to bother you. But I'll tell you, even the guys who have capital to throw at it, when they're down 30 or 40% on $500,000 to $5 million, it makes a difference, guys. Or if on $5 to $10 million, everyone I've spoken to, even at the level of $5 to $10 million and above, when they, for instance, wanted to buy in here, and you guys remember this, I had some big institutional investors, $500 million players in the markets, okay, in crypto, specifically in crypto, literally they were talking to me in this zone here, and I was talking with them. They didn't like my answer. They said, well, we're going to go long on Bitcoin. I said, that's great. You could trade this very well. Okay, you try and trade this well, but you need to have, and I told this $500 million crew, you guys know this directly, okay, directly I told them, you better be able to put 10 times any amount that you put in here at every lower level on the Fibonacci. Boom. And I gave him a chart down to the 786 and the 86, believe it or not. And that is a guy that will not talk to me out of embarrassment right now. And that's no one that you know here, etc. But that's a big deal, okay? Right. You better have 10 times the amount you put in. Talking to a guy who's $500 million heavy in the crypto space, guys. He $500 million heavy. Wanting to go long here, I'm like, you better have 10 times at each level of the Fibonacci, the 23, the 38, the 50, the golden pocket, the 786, and the 86. Boom, guys. Big deal. Big deal. The guy won't even talk to me anymore. So in terms of that, if I'm a bit conservative, if I want to hit a target, if it's technically indicated, I'll take the probabilities. I'll take my chances with TA every time. I'll take the 786, the natural 786, in terms of that as a target. I'll take the 86 as a backup and core underneath that. And in terms of that approach, Do understand here as well, we caught this, boom, to the upside, small ascending triangle. We caught that. We traded that. So I do also understand things can change on a dime. I mean, they can literally change in 5 minutes. I remember the guys in the back during this specific moment. That was the heaviest retrace that we had in a long time here, guys. So in terms of this, what I will say is we're ready to trade anything. We will literally trade. We have multiple VIPs in the back right now, and that's not a, hey, join us. We're trying to learn something. Man, you guys, you got VIP in the back right now. We got multiple VIP, maybe half a dozen, at least half a dozen right now that are specifically in at least a triple-digit trade. A triple-digit trade, 100% to 500%, 800 or 900% right now. Right now as we speak. I know that we have, a half a dozen? We can count them. Freddie, Anthony, what do you think? I know we have Sean. We've got Vlad. Vlad, I know you're triple digit easily. Bill, I know you're triple digit. Look at the top of the screen right here. And I'm talking about active trades right now. Right now, I bet we have half a dozen that are triple digit right now in terms of returns. So we'll take the technical approach, please. This group likes TA. We like what it brings to us. I like the downside target a lot, guys. And in terms of that, I may be a bit, I don't want to say I'm biased towards the downside target of a flag. It's a technical expression. I want to hit it. And in terms of this specific feature to the upside, when people want to say, I did entitle the video, we caught the bottom. We did. This specific bottom. Now, I entered here, traded, boom, triple digit. A lot of VIP did. When I say triple digit, over 100% trade, okay? To the extent that I booked that, re-entered. A lot of VIP did as well. What I'll say is, hey, guys, it's just equities aren't finished, guys. Equities aren't finished to the extent that there's some huge rebound. Have you guys seen the NASDAQ chart? I have to bring this up. Have you seen the NASDAQ chart? We have to go through this. Do you see what the NASDAQ chart looks like right now? Now, technically, we're on a level of support. I'm going to give it to you. Okay, technically, let me get rid of these Fibonacci's to the upside. Technically, we're on a level of support, okay? So, yeah, we could get some interaction here. But look at this, level 1 wedge, okay? Descending wedge failed, no buyers. Level 2 wedge, it's just there's nothing getting this thing back up. We had some nice interaction here along the first hit on this specific level of support. To the extent that we can get some friction here, some kind of green going, something, we're on a level of support. We lose this, guys. To the extent that this is something that we could hang on to and expect a bit of volatility here, that could be fine. But we're not out of the woods in terms of the equities. I don't see how we could think that with those patterns that we're looking at. There's no bull on the map on that, guys. There's not a bull on the map on that chart that we just looked at. There's not one rolling. There's not a bull there at all. So in terms of that, it's not a bull flag. It's not a bull. It's two collapsing patterns. Okay, so maybe an about face for the entire economy, inflation, and everything else will just occur. Maybe that'll happen. But to the extent, I just don't want you guys overexposed. And I'll say this: with that stated, I have a long. Okay, I currently have a long. So to the extent I'm saying, no, we're not going up, etc. What I'll say is I'm in a long. I'm in a long right now up to, and a lot of VIP are to the tune of, I'm currently in a 4-digit trade, meaning 4-digit 1,000% plus trade. And a lot of VIP are as well, period. I know that at least 3 digits. I'm not sure. Anthony, Anthony may have a quadruple digit trade right now. You can update us. I know you looked in the back. We looked in the back earlier. 700, 800. Freddie probably, I think 6'5", 600, 500, somewhere around that. Probably up to 700 now, Freddie. Bill, I don't think you've posted yet, but guys, this is what we do. We catch trades. Bottom line, that's what we do. We like to trade on leverage. Everybody understands. Vlad, I want to hear from you, brother. I really do. From the bottom of my heart, brother, I want to hear, and I hope you're having a great Father's Day with you and your dad, everything going well, and you and kids, or whatever you got going on. I hope it's great with the family, brother. And I want to hear how great you're doing in terms of your trades. It means a lot to us, brother. Like, bottom line, period. It does. I appreciate everything. And so in terms of this, I just, with all this said, and no, we're not going up. Understand, I'm in a long, okay? So we're going to trade it, and I'm going to say this every single time. Freddie's saying he's triple digits right now, meaning 100 to 999. Okay, in terms of his current trade. And Freddie, you're tearing it up. Anthony, you're tearing it up. All you guys in the back are tearing it up. I was really impressed with Bill the other day coming through with just a powerhouse punch. If you guys see the ticker on the top, that's real. Those are real returns from our VIP. That's not smoke and mirrors. That's not that just make believe. Those are real returns. Jubal at 500 plus, and you guys are just rocking it. Look at Freddie at 1,002%. The top, they just Pathfinder coming through. He's on vacation right now in Croatia. One of our VIPs from Slovenia. He 500% while he's on vacation. Boom, just laying waste to it. Sean, Amos, want you guys to get up there a bit. Richard, I know you're making some more time to trade, but yeah, this is the top trade group. We're excited about it. So with me saying that we're not heading back up to 30, right, to this, because we do have a target up here, right? Right now we don't have the immediate, this is part of the explanation as well here. What I do is I focus on a target, first of all. 1, find your target. 2, find a pattern that'll get you to your target, period, right? So I have a target to the upside. We're going to call that 28,003. I have that as a target. However, I don't have a pattern right now to get me to the target. So let's just put it like that. Let's frame it like that. I don't want to give false hopes. I don't want to give even really a conditioned response. We'll stick to our strategy, which is 1, find a target. 2, find a pattern to get you to your target. When you get those two in sync, and if you can get those in sync across your time frames, guys, multiple time frames, and you get your indicators literally just humming, guys, that's when you're making good trades, okay? When you can find a target, you can find a pattern to get you to the target, and you can find across several important time frames, 4 hour, 1 hour, the 5 minute, maybe even the 30 minute, if you choose, and the 1 minute, you can find literally confirmation across and agreement across all those time frames, and you have a pattern to get you to your target. That is when you're cooking with gas, guys. That's when you literally say, good, it's time to roll this baby in 6th, 7th gear, and let's hammer down on the throttle and push the NOS. Boom, let's roll with it, right? Let's hit 200. Let's go with this, right? That's when you're trading, right? That's nice. Now, in the meantime, when you have contraindications, right? When you have the contraindications, you don't have the agreement, guys, it's risk. You understand that. There are opportunities at times. I'll tell you, she pays well on the extremes. You notice this. You know this. You have to hunt and find the extremes, however, which is difficult because it's easy when the screen shows you 7% to the upside. Hey, it's a big green day, right? Or it's easy the other day when she's down 15% or 14%, right? That's an extreme move. Boom. We caught that bottom in the back right underneath the level of support. We caught that. And guys, what I'll say is when she throws you extremes like that, while the rest of the world's like, oh, it's over. It's just this thing's over. I can't believe I bought higher or whatever. No, those are the extremes where you launch into maybe a long boom like we did. Yeah. You're wondering how these returns get made on the top. We play with the extremes, okay? And it's easier, again, when you're on the extreme of 14% down. Boom. But we watched that 14% down be only like 6% down. You guys saw that, right? 13% down. It wound up only like 6% down or 7% down. So you have to pay attention. These moves to the downside here, some of these moves are clouded within a day. You don't really see that much volatility. It's not a Saturday, everybody's chilling out. It may be the middle of the night. It may be a target you have to set your order at to say, well, that would require it to go down 10 to 12%, but I'm going to go with that, right? It would be within an expression along, let's say, the MRC, mean reversion channel, or along your Bollinger Bands, however you have those issues laid out. But I'll just tell you, she pays well along the extremes. And I'm not talking buy low, sell high. I'm talking buy the low, sell the high. Okay, that's where she really starts to pay when you get into the severe extreme. So, yes, we have a target to the upside. I don't see an immediate target that we would have to get us there. I'll say immediately what I'd love to see, if we could just repeat the amplitude of this channel, boom, to the upside, just classical TA. I would expect a confirmation and hit back at least through this specific rising wedge where this target is identified. If we can get up and over the level of resistance and break out through this, we're going to need the bullish power through. Bottom line, it's a rising wedge. It's a typical pattern. But taking up the specific amplitude here, boom, to the upside, I'll tell you guys, that would be a sweet move. That would be a nice move. That's technically indicated. Any targets at this zone preceding highs would be an interference point potentially, but that would give us back level with this specific, almost with this specific cluster of resistance moves, pivots at this preceding zone. Essentially, this first, I'd say actually the 1, 2, the third, that third pivot point down in here to that 23,724, and that would be a sweet move. That'd be a 14% move to the upside. We'd be very excited. You say a 1 minute breaking out now. 1 minute breaking out now. Let's see what Freddie's got on the 1 minute breaking out now. What do we got on the 1 minute breaking out now? Picking up on a support into a rising wedge. Okay, we're trying to formulate that bull flag that we did discuss earlier on in terms of the catch feature of any failed bull pennant. Boom, bull pennant. You see the move to the upside, symmetrical triangulation. This specific formation, we have worked into a rising wedge here, typically a bearish pattern. We would want to see bulls push up and over and potentially contact back along this apex move here. Boom, to break out to the upside. What do we got here? So, in terms of the features, what I'm going to tell you guys is if you're looking for an entry for a long, I want you to focus on a level of support or a Fibonacci target. Bottom line. Okay, if you can find a pattern therein, I'll just remember, or I'll remind you all that a lot of these smaller moves can compound and traject up dramatically, extremely well. You all know that. They can compound up extremely well. What was the low thus far? What was the bottom thus far? I'm going to say thus far. What is the bottom thus far? Level of support, boom, down and through this level of support. You guys know we were focused on this level of support, right? And so in terms of catching the bottom, you literally had to go with a capitulation beyond an established level of support. Again, what was this? It was a divergence, right? A divergence on the price line from an established level of support. Boom, pick up, boom. I booked a quadruple digit short here, over 1,000% short. Boom, right there. Outside of the level of support with the notion, and I flipped to a long in this zone. Boom, move to the upside. Very nicely done, guys, in terms of a lot of VIP. We were in the back. I brought this to you. I believe it was on the 30 or 45 minute. And the 45 minute was interesting because it had the 45 minute. I'll still like this. I'll remember that I gave you this chart in the back because it expressed very well at that time. And you'll see how much it recoiled back. It was that 45 minute. You guys know that. I was like, why I brought the 45 minute when the 45 minute was sitting. Boom, on that level of support. You guys know that. So that was a sweet time frame to throw up at you. I had to find it. I was like, what time frame is going to show them we're on support? So congratulations to VIP. Those time frames come in handy, huh? You got to communicate something. It's like, wait, it's on support. It's past support, right? So that 45 minute had us on support. That was a nice pickup in the back, catching the bottom. Way to go. What's up? What's up? Yeah, we got to catch those, huh? We got to catch those. So if you're looking at, well, how do I pick up a real long like that, or something that's on leverage where there's not much room to really go? You got to hit those. You got to hit those extremes. You got to go on or beyond those levels of support. You know what happened here on that level of support. Drawn on most of the time frames, what happened? People were picking up with leverage right and left. People wanted that 100x like you wouldn't believe, right? They wanted that 125, that 150x to the upside so badly. They kept buying in at this level of support. Boom, getting washed out. 3.39% below, right? You guys know this, 3.39% below, washing out all of those positions. What's up? Even the 50x's got hammered. Out, liquidated, right? So that level of support, you got to give it some room, right? That 45-minute time frame was a gem we threw up in the back in terms of, hey, we're about there. And it was a difficult area, but it did pick up and gave us a little bit of patterning to work with. If you guys will recall that, just a touch of patterning as we would look at that bottom line feature. I just saw it and I thought, like, double, triple bottom, maybe. You know, it's like we had been through enough descending triangulations, like kind of wedge, double, triple bottom. I started looking at them like, oh, this looks like this could play right below the level of support. But like, let's see. Just had a different. It had a different. It seemed buyers were coming in differently here than what was being expressed the majority of that day. It's like it could not cease hitting lower lows, right? Establishing lower lows. And this was like a double bottom. Hey, okay, I'll pay attention. It could have been a descending triangulation, but I was like, it was the first time I saw at all bulls charge in, buyers charge in, and formulate anything around that 17.7, right? And very nicely done in terms of the overall bottom. I don't want to go beyond the Fibonacci's. I don't want people to listen to something and say, well, now's the time. And this is a big deal, guys. I don't want people to listen and say, oh, well, this is the bottom. I need to throw in my $500,000. or my 10,000 or my 5, whatever it is in terms of going heavily into it. You always in crypto, and people will jump in, see one thing for 2 minutes, and decide that's it. They're going to put some people put their life savings into it. You don't know, guys. But in terms of that, we're very particular about this. Remember, never be overexposed at any level, guys, in crypto. Always with heavy cash reserves. And we've been saying that for the last, guys, since we've been on air. You know this. We've been talking about lower levels since last summer. Looking forward to the golden pocket thing. Glad we got here and there and beyond. The 786 is no joke. That's a pretty severe level. Okay, we'd like to get there on all the exchanges. We didn't know. We've gotten there on a few exchanges right now. That's 78.6%. We had the same thing occur with the golden pocket. We're gonna say this. Some of the exchanges almost gave the 786 to the buyers on this last drop here. What I'll say is this. What I'll say is the following, guys. In terms of this, do understand that that the framework is. We just had this occur on the golden pocket, right? The USD/USDT DPEG was a big problem. USD got the golden pocket first on Binance, and USDT did not. Huge deal. People on leverage didn't get a chance at the golden pocket. We traded it a little bit live, and then it fell through on a fan reversal to the downside. You guys will remember that. So to the extent that we're in some interesting waters with crypto pricing, okay, cross exchange, etc. You could call it just deviations in terms of permissible deviations on different exchanges. Of course, they'll have minor differences, but there's just it's interesting when you're trying to hit your targets to the downside. So the 786 is honestly where we're at. I'll let you know the 75th percentile, and the VIP know that discussion in and out. I'll leave that with them. But that 75th percentile that you're going to find on the GAN box, okay, the GAN box are your institutionally recognized discount levels. You know this, a GAN square. If you go to the, let's go to a GAN box, not a GAN square, but looking at a GAN box, boom, drawing down through and seeing a specific 75th percent retracement. We got very close to the 75th percent retracement. Now the 75, essentially a 75% discount, because a lot of people, Wall Street, mutual funds, etc., will say, okay, we want a 75% discount. That's just, give me that stock, give me that Bitcoin, give me something. I want a 75% discount. That's it. Put it on the books. So they'll want a 25% discount, right? So we pay attention to these in addition to the golden pocket, in addition to the Fibonacci's. Okay, and within this context, we came very close to that 75th. We were looking at that in the back. If you played a little aggressively on that 75th percent, that 75% retracement, literally 75% discount. That was close, guys. That's within what was that, 380 we measured the other night, 380 to 450 bucks within that specific range. That was a big, that was nice, guys, that we had discussed that 75th and we got within $300 or $400 of it. That's nicely done. I think that's a significant move there. Again, I'll just remind you that we're not within let's just say that we're not within the framework of a full completion to satisfy the seller's obligation on the flag. We're just not. 15 grand is where that is. Now, to the extent that I have been saying for a while, and VIP know this, very interesting. I've been saying for a while that Bitcoin has 3 levels, 45, 30, and 15. And Luke knows this. Shout out to Luke and his family. But to the extent that we've been saying that since even the run-up in here in terms of backup levels to have is 45, 30, and maybe 15. That would be the maximum. It happens to coincide perfectly with the specific move to the downside. You guys got this. And the seller's obligation to repeat that move, the specific flagpole. They say flags fly at half mast. This would be a bear flag. Boom, moving to the downside. That would be the full completion target on the lines. The actual candle wicks would be more aggressive, just so that you understand. The candle wicks would take you to a more aggressive price so that you can frame yourself around the more aggressive price, literally being the target, the technical target of 11,910. That is the technical target. That is not an opinion. Please measure that yourself. The downward price action, upward channel, downward price action. We would expect a repeat of the amplitude. Now, it's not a right or wrong. It's a he's correct or they're incorrect. No, it is a technical target, bottom line. No one's going to argue with the technical target. To the extent that there is a disruption in the market, something else were to occur, or there's some other, like the war event in with Russia and Ukraine really jolted the markets, right? To the extent that there's some sort of a ceasefire, or there's some sort of who knows, there could be some dramatically great news where everything just goes onto a rebound recovery mode that's maybe not, it's not a technically indicated move. Nonetheless, it really impacts the markets. Then that's great. Then there's, it reverses the entirety of the bearish nature of things. That'd be fantastic, guys. But for right now, those levels below are real targets. Okay, that 14.9, that 11.9. All right, they're just real targets. It's not that far either. I mean, you look at the price action right now. We're talking about 14,900, about 15,000 to about 11,000 here, 11,900. So it's not that far, and I just encourage you all to learn to trade is the bottom line. If you're looking at heavy entries lower, I would encourage you to learn to trade. Bitcoin in the last 3 years, we put this up in the VIP, has been up, 450% the last 3 years? Guys, the VIP are making 400%, 500% multiple times a week. Okay, not that there's no losses on the trades. I'm not going to say that at all. But the ability is there to compound your money. And the better that you get in terms of that consistency, we're always looking for that consistency. And I'm telling everybody, light on the cash until you become consistent. Until you tell me, London, guess what? I can book 4 positive trades any day I want, any time of the day I want to. Beautiful. That's when your equation can shift a little bit, right? Then we start having real discussions about, well, what's your return ratio, right? What's your risk to reward? What's your payoff? Is it 1 to 5 on a good trade? Payoff is 1 to 5 or 1 to 10, right? Are you making a 5x or a 10x on your good trades, right? But until you get consistent, it's not worth really getting into that, guys. You have to master where you're at in the market. You have to get down the consistency. That's job number 1 for a trader. Get down consistency. Then we get into that talk in terms of, well, what's your payoff? What are you looking at, a 1 to 10? I mean, can you hit a 10x? Because we're hitting them in the back, guys. We have multiple VIPs open with a 10x. Well, I'm open with a 10x. In terms of that, I know you guys are open. Freddie probably with a 5x. You closed out a 5x earlier today. I think right at a 5x or so. Anthony, I think you're probably 7x right now. And Anthony's got a few trades in the cooker right now. He's doing really well in terms of that. But yeah, the Bitcoin has had, just to reframe this, has had, look at this, 1, 2, 3, 4, 5, 6, 7, 8, guys, 7 to 8, 10x opportunities. Moves of 10% at least on leverage. And again, understand leverage has a bad name because people abuse it. The higher the leverage, the lower the capital requirement. And people don't even get into the discussion in terms of what your payoff ratio is. What's your payout ratio? What's your payout ratio? If you start talking with someone who's been trading a while, they'll say, well, my payout ratio is normally like 1 to 7, maybe 1 to 6, right? So I can maybe lose 1 out of 5. Right, I can lose 1 out of 5, and I'm going to make a 5x or a 6x. You still become profitable. But until you can get down 4 in a row consecutive trades, and you tell me, London, I could book 4 consecutive trades. If you can't do that, anytime you roll the dice with the market, and at that point you are rolling the dice, guys, that is a gamble because you have a 25% chance of losing at least. Right? You guys know that. If you can't book 4 trades in a row, you have a 25% chance of losing. And it's not just mildly losing. Well, I'm gonna set a stop loss. I'm gonna get out of this just in time. Don't worry. I'm gonna put 20 G's in this one, or whatever it may be, and I'm gonna set my stop loss. No, the trades you lose are the trades where, dang it, I tried to set my stop loss. It went wrong. You have an issue with your stop loss or whatever went wrong with your phone or your computer. Those are the trades you lose, right? Where there's an issue, a lot of times something did happen. So be careful. And that's what I'm talking about. Like when you get to a consistent point, you're booking 4 positive trades in a row. What's going right every time? Your technology, every time. Your stop losses, every time. Everything's going right every time, okay? There's no surprises, right? And you're used to the amount of money that you're trading, which slowly should get stepped up, in my opinion. I think the opinion of the VIP, as you guys are doing great. And some VIPs are well into the money, well into the 5Gs, 10Gs, 20Gs trade. Still 100x. You guys know this. Like trading heavily. Some VIPs trading more heavily than that, guys. So to the extent that that's reasonable, it should be a goal to get there. You start off with high leverage and low capital requirement. Don't ever violate those rules, please, okay? So this is London with Bitcoin Spike. We're currently pushing the level of resistance across the top here. A lot of VIPs in the money. multiple VIPs, and great. Just guys, you're trading the lights out of this. I want to see optimally this specific level of resistance, right, broken, and the amplitude carry up of the channel would be just phenomenal. Boom, to the upside. What do we measure this at, guys? About a 14-15% move, stacking on 3,200. Now we're going to have to get over this specific feature here. This is not going away. If we can get up and over that level of resistance, the peak of the ascending wedge, boom, it's going to be a target for a lot of people short, guys. If we can operate up and over it, could be a very nice target. So we're going to keep this in mind in terms of a confirmation play here. And I'll just tell you, minute by minute, hour by hour, we're in the back, guys, to the extent humanly possible. In terms of that, I want to invite you guys to join. I know I do that all the time, but we're just cranking it through like this. We want you in the back with us. Look at these gains. It's just nice, guys. It is what it is. And we want you to enjoy your trade, your trading event, to enjoy everything about the market, to enjoy your Father's Day particularly. And I wanted to stream for a little bit and just say hi, guys. This is London with Bitcoin Spike, inviting you guys to join us and shouting out to the current VIPs. Let's get up and over this, guys. Let's get